Ever heard of Kikoff? It's this new service promising a free credit line, no credit check, and the chance to build your credit score without spending a dime. Sounds too good to be true, right? Well, on today's episode, we're diving deep into Kikoff to see if it's actually a legit way to get ahead financially, or just another hyped-up app. The hook, free credit line, really. Let's face it, building credit can be a struggle. Traditional credit cards often require a good credit score in the first place, leaving those with limited credit history stuck in a frustrating loop. So, the idea of Kikoff offering a $500 credit line with no credit check and zero interest is undeniably appealing. But here's the thing, in the world of finance, free lunches are rare. So, how exactly does Kikoff make money, and can you really make money from it? Unpacking the Kikoff model, how do they operate? Kikoff's business model isn't entirely transparent yet, which can be a bit of a red flag. They're a new company, and while that doesn't automatically mean they're bad news, it does mean we need to be cautious. Here's what we do know. They claim to report your on-time payments to credit bureaus like Experian and Equifax. This, in theory, should help build your credit score if you use the credit line responsibly and make your payments on time. The money question, can you earn with Kikoff? Now, back to the question burning a hole in your pocket. Can you actually make money with Kikoff? The short answer is no. Kikoff itself isn't a money-making platform. It's designed to help you build credit, not generate income. The bigger picture, building credit the right way. Think of Kikoff as a stepping stone. It can be a good option for beginners to establish a credit history, but it shouldn't be your only strategy. Here's why. Limited credit limit. $500 isn't a lot. While it's a start, using and responsibly managing a higher credit limit can have a more significant impact on your credit score. Uncertain long-term viability. As a new company, Kikoff's long-term sustainability is unknown. If they shut down, your on-time payments reported to credit bureaus might not carry over, leaving your credit score unaffected. Alternative solutions. Building credit with confidence. So, what are some better ways to build credit? Here are a few options to consider. Become an authorized user. Talk to a friend or family member with good credit and see if they'd be willing to add you as an authorized user on their credit card. Just remember, responsible use is key here, as their spending habits can impact your score. Secured credit cards. These cards require a security deposit that acts as your credit limit. Use the card responsibly, and the deposit gets returned to you once you close the account in good standing. This builds positive credit history. Credit builder loans. These loans work by depositing your monthly payment into a savings account while you build credit. Once the loan is paid off, you gain access to the saved funds. Kikoff, a viable option, but not the only option. Kikoff can be a helpful tool, especially for those with no credit history. However, it's important to manage expectations. Don't expect to get rich using Kikoff, and be aware of the limitations. Remember, building good credit takes time and responsible financial management. Explore alternative solutions alongside Kikoff for a more well-rounded credit-building strategy. Final thoughts, do your research. Before using any financial service, do your research. Read reviews, check the company's background, and understand the terms and conditions. Knowledge is power, especially when it comes to your financial well-being. With that said, thanks for watching, and until next time, stay financially informed.